Breaking news coming in here. The Federal Reserve just made another interest rate cut. Business correspondent Alexis Christoforous joining me now for what this means now for borrowers and, of course, the economy as a whole. Alexis, this, of course, comes on the heels of the Fed's half-point cut in September. Break it all down.
That's right, Kira. This was widely expected, a quarter-point cut in interest rates from the Federal Reserve. Not that aggressive half-point cut we saw in September, but the second interest rate cut we have seen now in the past 4 years. The Federal Reserve making clear with this announcement that they believe inflation has come down enough, is close enough to its 2% target, that the economy can handle another interest rate cut. In their decision, the statement they're releasing explaining their decision today, they say the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. So what does this mean for consumers? Well, it means that borrowing costs are coming down. They're coming down slowly. We're going to need a number of these interest rate cuts over the course of months into next year for people to really start to feel the effects. But what this does is it lowers borrowing costs and interest rates for things like credit cards, auto loans, home equity loans, small business loans, and hopefully mortgages. You know, the Fed doesn't determine mortgage rates, Kira, but what we've seen, this sort of interesting phenomenon, is that even though the Fed's been cutting interest rates now, mortgage rates have actually gone up since that September cut. And that's because they're really tied to what's happening in the bond market. The bond market's sort of looking ahead now to what to expect from the economy. Will it be strong? Will inflation come back? So that's sort of where mortgage rates might even be headed a little bit higher in the coming months, according to some economists. But overall, encouraging news here that the Fed believes they're in a position to continue lowering interest rates.
Good. That's what we want. Encouraging news. Alexis Christoforous, thank you. Appreciate it.